How long does a federal tax lien last? What a great question. And we're going to dive into that in this video. The IRS has got the biggest and best marketing machine out there. It's called Al Capone. A lot of people may or may not realize this, but he went to jail for tax evasion, not for bootlegging or murdering people, which he did, okay? So we're gonna talk about how the IRS isn't the big bad wolf that you think it is if you understand how to look at that when it comes to these properties. And in this video, you're gonna discover the surprising truth how an IRS lien can actually be a non-event in some cases. We're gonna show all of that in this video. But as you know, if you've got any questions throughout this video, just tip them over to me. I'm the one that answers those. Like, subscribe, ring the bell, or whatever you do for that thing to alert you that these new videos are coming out. Now let's talk about this. Let's talk about an IRS lien. When I'm looking at a list of properties, I'm looking to, let's just start with tax lien certificates. I'm looking at a tax lien list. The last thing I'm concerned about is an IRS lien for a couple of different reasons. First of all, I'm buying a lien on the property. I am not buying the property. Let me repeat that. I'm not buying the property. All I'm doing is buying a lien on the property. So let's say, for instance, I spend $2,000 on a lien on a property that's paying me 18%, and it's got a 2-year redemption period. Well, it's got 2 years before I can do anything on that property, okay? And let's say it goes all the way there and they go to the deal and they haven't redeemed on it, and so I have to foreclose on it. And upon foreclosure, I look down and say, oh, there's an IRS lien on it. It's still not a big deal. The IRS will put a lien on everything. So if you owe the IRS money, their best attention getter is everything, okay? They'll come after you. And listen, IRS liens aren't as common as you think they are, but they are substantial. So in other words, if somebody owes the IRS money and they're at a crossroads and they can't negotiate, they won't talk, they won't do anything, their last resort is, we're gonna put a lien against everything this person owns. It could be cars, it could be bank accounts, it could be all of their properties. So let's say that they owe the IRS $30,000 and they put a lien on every single property they own, way more than $30,000, but it's basically freezing that person out so they have to deal with the IRS. That's the tactic that they use, so to speak. So it's really interesting when I see an IRS lien on a property. It's interesting and it could tell a bigger picture, but it doesn't mean, oh my gosh, I can't do this deal. Like anybody else, I would have to notify the IRS that we are foreclosing on this property. And the only remedy for the IRS would be to satisfy the delinquent taxes plus my 20%. And as I've said in other videos, okay, they already owe the IRS money. So let me get this straight. The IRS is going to pay off another debt of theirs and then be on the hook for that one. I just don't think that that's going to happen. Let me put it this way. In 30 years, I've never seen that happen, okay? Could it? Yes, okay? So cuidado, walk carefully through this whole process. But when I go to foreclose on the property and there's a tax lien on it, I just notify them. Okay, now let's go a step further. If I'm buying a tax deed and I'm going to the sale, remember, I'm going to own that property free and clear. When I go there and I put my hand up, I own that property. So I better do my due diligence, which means a title search on the property. I want to see every lien on that property and make sure each one of those people are getting notified, including the IRS. Now, the challenge with the IRS and everybody else is by federal statute, the IRS gives themselves 120 days. So they have 120 days to come in and do something about the notifications. Whereas some counties, when you're going into foreclosure, it's 60 days, 90 days. Some are 120, but just understand, it doesn't matter what state or county you're in. The federal government, the IRS, will get 120 days. So sometimes the auction is here and the 120 days is past that. So then you got to ask yourself, okay, is this lien going to affect my deal if in fact I do have, they do something to make it so that this thing sticks on there. I don't know what that would be, but let's say it is. And sometimes you go, hey, it wouldn't matter. So let me give an example of why it wouldn't matter. There's a $10,000 tax deed coming up. The property's worth $250,000. And I bid that property up to say $70,000. I'm the successful bidder. I got a great deal. Okay, well, wait a second, Sean. There's a $30,000 IRS lien. Yes, there is. But if I've got $60,000 in excess funds, I'm good to go. So in other words, I've got $60,000 that I can apply that towards the IRS lien. Most of your investors out there will not know this. Okay, so that gives you that added advantage. That's just one thing you're looking at. Statutorily, I don't even know if that's a word, but we're going to say that. If somebody has an IRS lien on them, the IRS lien itself can only last 10 years. The IRS, there's all these parameters, they can extend that, but the IRS, if they're not going after that money, it goes away, okay? But we're just talking about on the property. So this really comes down to the research process. When I'm looking at a list of properties, I really don't care if it has an IRS lien on it. It's interesting and I factor that in, but I want to make sure a couple of things. I want to make sure they're notified. I want to see what the time limit is. Finding out how the county operates is crucial. So when I'm going into a foreclosure on a tax deed property, going to a sale on that, I want to talk to a real estate attorney and say, how long is it that these people are being notified? How long before the sale? And so in other words, when the county's foreclosing on this, have they been notified 60 days, 90 days? How long? Because that IRS lien is 120 days. Okay, if that sale happens before that, there could, quotation marks, there could be a problem. Okay, even though they're notified, so the IRS lien could disappear afterwards. If they don't do anything 120 days later, even though the sale happened before that, now they're gone. But if they do something in that window and you could have a problem. And like I've said before, not likely to happen. So one of the big takeaways I want you to have in this is going back to the fundamentals. What is a tax lien certificate? Okay, one of the most asked questions I get is always about the IRS. Well, certainly the IRS and the mortgage. We want to kind of table that. And so why am I so confident with this? Because it's the way this is set up. You know, tax lien certificates have been on properties forever. So what do I mean by that? If I buy a property, let's say in Virginia, it has taxes owed on that property before I bought it. So the taxes have always been owed on that property since before we became a country. So what the county says is if somebody doesn't pay the taxes on, by law in our state constitution, we become the superior lien involved. This is before income tax was ever dreamed up. Okay, so the lien has always been on that property, the tax lien. And it's already in the state statute saying that it takes a superior position to all liens and encumbrances, regardless of when the lien was filed. It's very clear on this. When a tax lien comes up, boom, it doesn't matter what other liens had been filed before, because technically, I know this is kind of a wordplay, but they can't be filed before because the lien has always been there. I guess a better way to say that, it's kind of like a phantom lien. You don't see it until somebody doesn't pay it. When it doesn't pay it, boop, it pops up, and by law, it takes a superior position. Nobody is surprised by this that's in that industry. Banks aren't surprised by it. They know this because like I've said before in other videos, when you're signing your mortgage, one of the paragraphs in there is very clear that if you fail to pay your property taxes and jeopardize the mortgage company and they have to pay those taxes, immediately they can call that loan due upon payment and they can start foreclosure within 30 days. Every single mortgage is out there like that. So again, all of this is interesting. It just puts you in a really powerful position because all you and I are doing is giving the county the much needed money to run their operations, and we take their position, which secures us. So the county says, we need some money out there. Like, yeah, well, what's in it for me? Yeah, I get 18%, but I got these mortgages. No. We're going to make it so you're the first position lien. Oh, okay, now I'm in. Really solves a lot of problems when you look at it that way. Hopefully this explains why the IRS can actually be fun when it comes into a situation on a piece of property. Because here's what all the other investors are thinking. Oh my gosh, there's an IRS lien on here. I can't do anything with this property. I'm going to move on. I've seen this happen over and over again. I've even been at auctions where the county said, I want everybody to know that there's an IRS lien on the property. Sometimes the county will say, and we don't notify the IRS. So now you got to think, oh, okay, they don't notify the IRS. What if I notify them afterwards? We know that they're probably not going to do anything in 120 days. Am I willing to take that chance? So there's a lot going on with all of this, and make sure you cross your T's, dot your I's, and get everything straight out. In fact, if you like, I've got some free video training on this. Just hit the link down below, higginsmethod.com, complimentary to you. And also I'll throw in a brand new book that I've just put out there. It's called America's Best Kept Secret on Investing. I'll send that out to you as my gift to you. This is Saen Higgins saying God bless and good luck.